Well, hey there, everybody. Hey. This is Arlissa, Educator2Trader, and I'm coming with the video about what we can anticipate for this week, the week of June 19th, which is today, through the 23rd. The market's actually closed today, but I want to tell you that in this video, I'm going to talk about the different meetings that are coming up. I'm going to talk about some earnings. I will give some charting and say what does the S&P 500 show us for the week and give you what my expectations are for what's happening in the week. Of course, don't forget to like and subscribe to the channel, right? That way you'll make sure that you don't miss anything that I put out. I'm the option sellers coach, and I help to coach you from an options seller standpoint. Who almost got tongue tied there. All right, so let's look at what's going on this week. Today is a bank holiday. Markets closed actually today. Tuesday or tomorrow, housing or building permits and housing starts. Those are showing up tomorrow morning, 8:30 before the market opens. Yellow folders. 11:45, we have FOMC member Williams speaking. Yellow folder. 11:30, 11:45 tomorrow. But on Wednesday, we have 10 o'clock in the morning. Fed Chair Powell is going to testify, and he's testifying before the House Financial Services Committee in Washington, D.C. So this testifying, generally he has like a set up speech of what he's supposed to say, pre-written speech that he's supposed to say. But after the speech, there's a time of question and answers. So during this question and answers time, he doesn't really know what's going to be said or what's going to be asked. So that's where you kind of get to some unscripted things. This is why it's read, because any little statement can be taken and it means something for the market, right? So also at 10 o'clock, FOMC member Cook is going to speak. Jefferson's going to speak. And then at 11:40, Goolsbee is going to speak. All three of those are yellow folders, but we do know when the Fed is talking, those can always cause some issues. So on Thursday morning, 4 a.m., way before the market opens, FOMC member Waller will speak. I guess if you're trading futures, that may have some impact to you. At 8:30, we're going to have unemployment claims again. Last week's unemployment claims was not good. It was not as anticipated. We had more unemployment claims than they speculated. So that's always a red folder, because that's an indicator of the strength of the economy, is how many jobless claims we have, right? Current account at 8:30. This is all before the market opens. At 9:55, FOMC member Bowman will speak. At 10 o'clock, the Fed Chair Powell will speak once again. This time he's speaking before the Senate Banking Committee in Washington, D.C. Same thing. He's got a prescripted speech that or testimony he's supposed to give, and then they open it up for question and answers. Question and answers can always be interesting, which is why it says there could be high volatility, mainly because the Fed chair is speaking. When Jerome speaks, everybody has to listen, and that's how that is. And that's 9:55 on Thursday. At 10 o'clock in the morning, we got Fed chair. That was Powell speaking at 10. We also have existing home sales, CB leading index month over month, natural gas storage at 10:30, crude oil inventories at 11. I'm really feeling like whatever Powell says at 10 o'clock is going to impact the market for the rest of that day and probably on into Friday. But then Friday morning at 9:45, we have the flash manufacturing PMI and the flash services PMI. Those are Friday. Those two red folders for Friday. All right. So that is what we see that's happening as far as meetings and information for the week in the red folders, orange folders, yellow folders. Well, hey, everybody. I wanted to come and to share what I believe is an incredible opportunity for those who are looking to learn how to trade options. And you need a little more guidance, a little more support as we move forward. It's the Options 411 live coaching and training. It's a 4-week program. I include several sessions a week that will get you up and running. So what's included? First, we're going to help you get your accounts open and set up the right way for trading options. Many of you already have accounts open, but you may not have them set up, or you may not be at the right level to trade options the way you'd want to trade options. We're going to help you get that situated. Then once you have your platforms, we're going to help you find your way around those platforms. You need to know which buttons to push, what's going to do this, what's going to do that. Many times I find that the platforms do a lot more than we know how to do, and you just want to be able to utilize what you have. We also want to teach and understand the language of options. Options is an entirely new education, an entirely new world for many of us, and new educations always come with new terminology. We need to learn the words so that we'll know what stuff means when they're talking about in the money and out of the money and all those other things, strike prices. You need to know what all that stuff means. We also will teach you how to chart support and resistance zones. Everything in stop trading comes down to those charts. People use indicators. I'm a fan of indicators, but all of those indicators are based on price action that's previously happened, right? So you want to learn how to chart the support and resistance zone so you can get a good understanding of where the price may go and may not go. All right. We also then will teach you all the option selling strategies, how to sell puts, how to sell covered calls, how to do vertical credit spreads, how to short so you can make money when stock prices are going up and when stock prices are going down, right? Then we're going to teach you how to create your own trading plan for profits. I have found that people are different personalities. Some are very aggressive traders. Others are a lot more conservative traders. You need a trading plan that's going to fit your style, right? So we'll help you create a trading plan that works for you so you can make your profits every week. And as a bonus, you're going to have access to the Educator to Trader membership. Our membership includes morning calls. We have coaching calls every other Saturday. We have a very supportive community that always supports and helps each other trade. It's just a good community to have somebody basically doing what you do, going the same way you're going, right? All of the stuff I just mentioned, that's included. Getting your accounts opened up, finding your way around your platform, getting the language and the lingo, learning how to chart, learning the seller strategies for profits every week, creating your own trading plan, and having access to the E2T membership. All that is included for $297 4-week live options coaching. It's regularly priced at $997. If you want to register, you can enroll at educator2trader.com. You can use that QR code if you like. I really would hope to see you there. We're going to start on Wednesday, June the 14th, and we're going to run all the way till July the 5th, where we will have a graduation. Wah, 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 da, da, da. Yeah, we'll have graduation on July 5th. I was trying to think of what was the graduation song, but it won't come to mind. Alrighty, so educator2trader.com if you want to get registered. I hope to see you there. So let's take a look at what SPX has been doing. We saw last week there was some heavy movement. As you see, this is the weekly chart that we're looking at, which means every candle is a week's worth of data. So last week's candle was heavily green, even though we had CPI and PPI and FOMC meetings. Oh my goodness, the market just continued to move up, I believe, because retail traders are definitely bullish and the market wants to keep buyers in and keep everybody engaged. They're definitely helping to, I hesitate to use the word manipulate, but that's pretty much what's happening. Make sure they manipulate it to keep everybody engaged and keep everybody buying. So if we look at the weekly chart and look at some support and resistance areas, we can see some places for support and resistance. You can kind of see that there are spots where the market goes up and then moves over and goes up some more and then moves over and goes up. And those can be seen as support areas. I'll change this to a line chart here in a second and you'll be able to see some stuff. So based on just leaving it on the candles chart, we've got some support in this area. Notice how all these candles are kind of stopping in the same spot. I don't want that to be red dotted. I want it to be black with a solid line. So let's do that so we can see this is some support on the weekly chart, right? I'm changing this to a line chart so you can see that there's some places where the market slows down. I don't know if I'd call this a full out support, but it does like stop. We've heard of stuff called chairs and things that this isn't quite a chair. If you can't put your booty on it, then it's not quite a chair. This point here would be this sharp heel basically would be another point of support in this case because the market is so high above it. But let's go back to the candles. You can switch to the line chart and see wherever you got peaks and valleys, those would be areas of support and resistance, because just let you know that the price went there and reversed. So the one I initially put here was in this area, and you can see you got a point here. You've got some places where it comes down and comes down. So this means this entire zone is some support. That's down pretty low though, 41.24. Don't really see a whole lot on the weekly chart for support up in here. But when we switch to the daily chart, I believe we'll be able to find some support and resistance areas. So we do want to look for resistance though. So let's see what's above where we currently are that will operate as some resistance. And you can see here that we've got some, first of all, there's a gap up here. I'll talk about gaps in a second, but there's a clear place where it went and turned around. This is 45.47 where it went up and reversed. Right, so let's go ahead. Now that I'm on the weekly chart, I'm going to go ahead and talk gaps. Anytime you have these places where price action is basically open and closes, between the opens and the closes, those are called gaps. I do gaps from body to body. I don't include the wicks because the wicks can kind of be just noise. But I want to change those to a dash line to let you know that that's a gap. That those are gaps basically. This particular one here is what be called a seller's gap. I'm gonna put a little text here so that way you can see what I'm talking about. Weekly seller's gap. So it's a gap on the seller on the weekly chart, and it's a seller's gap. Why is it a seller's gap? Because it gapped down. Anytime you're gapping down, you've got seller's gaps. There's some small ones here, like there's another small one right here, but the price, when we're looking for gaps, we're looking for gaps that have not been filled yet. And this one, is open, but there's no candle or anything in here, so it hasn't been filled. This one here, this little gap between April the 11th and April the 18th, the weeks, that has been filled by the candle that just happened this past week. Same as this one here. This gap here has been filled. So this one between 44.62 and 44.88 has not been filled in the recent past or recent future past. So it's waiting for to be filled. But the highest resistance here is 45.47 based on the candles from the week of the 28th of March, the week of the 4th of April. Okay, so now I'm going to switch over to the daily chart, which means every candle here is worth 1 day of data. Right, we're looking again for some resistance. We're looking back to see where was price before. Okay, so I'm going to make this a little smaller so it can all fit on one chart. Okay, this is where we ended the week over here on the right. This is where we ended the week with the green. Friday was a red candle. So we did have some down movement, even though the rest of the week was all green. If you're looking over here, though, in the area of the April 14th, right where we put our marks, you can see that this was an area of pretty heavy resistance, where 44.62 was the place where all of these bumped up against those. That's the bottom of that gap I was just mentioning to you, the bottom of that gap. So if we're looking for support and resistance for the week, this is a daily chart. We're looking to see where did the price go down and reverse, or where did it go and stop? Remember I showed you the line chart. I'm going to go to the line chart again so we can look at it on the daily chart. Now this here does look more like a chair, like you could actually sit on this. So let you know that this is where price went and then it took a pause. Right? So we're going to put something in this area to let us know that there's something here we need to be mindful of. If we're looking in this area, this is another area of support and resistance. You got a couple of peaks here, a valley, so just kind of hovered around in this area, letting you know that this is an area for support and resistance. Now, support and resistance are interchangeable. It's support when it's underneath you and it's resistance when it's above you. So what support, if the price goes through it, then that same area or zone can become resistance. All right, support and resistance are interchangeable. Today's support can be tomorrow's resistance. They can definitely be the same thing. Okay, switching back to candles, we can see these places. I gave us some support here we talked about 43.72 here. We've got a little gap that we need to look at on the daily chart. We make it dotted so we can see that this is, in this case, this one is a buyer's gap. And it's a buyer's gap because in these two, the candles right next to it, it actually gaps up. So I'm putting daily buyer's gap. Gaps operate as support and resistance as well. Generally, the market doesn't want gaps. It wants to be able to fill those in. You've got another one here. You see, if when you expand it out a little bit, you can maybe see a little better. But there's a buyer's gap here. This one's not very big, but it's here nonetheless. And then there's one just below it, right on the opposite side of this June 9th candle. There's one there as well. And then you can see all these boom, 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 all these places here where the price hovered in this area or in this zone and didn't move out of it. Why did that do that there? There we go. It needs to go there. Okay, these are some support, and then you got another gap down here. Now what you should do as you're charting, you definitely should look to chart on a daily, every other day basis. Definitely chart your stocks on the weekends so you can see what the coming week could possibly hold as far as price goes. Here we go. This is a daily buyer's gap. There were some other ones. I didn't write the text for all of them, but this is happening in this area. There's some gaps. So if we're looking for resistance areas, we need to see, we looked at the support just now. We looked at the resistance. Going back to see where this line up here, these two dotted lines is where that gap was. I showed you on the weekly chart. So now let's go and see where was some resistance. And this is where it is basically right here at 44.62. You've got some resistance there, little bitty gap here at 43.84 looks like. 43.84 is the top of that. It's a little bit above where it's actually below where we are. Okay, so it looks like your resistance is at 44.62. So if we're thinking about what do we have going for this week, what can we anticipate for this coming week in the market, it is that we're basically in a very overbought situation. The market is pretty unstable. We're in uncharted territory, and there's really no real reason why we're where we are. We had the rate hike pause last week, and that encouraged people, I guess, to buy. We still got banks that are in unstable situations. We're basically facing a recession. There's a lot happening. It's weird that the market is so green, even in the midst of all the financial turmoil that we happen to be in. So you just want to be very careful as you're trading. It wouldn't make sense that the market is going to go up much higher than it is. So if you're in long positions or you're in positions where you believe the market is still going up, or bullish positions, you may want to, size down on some of that and then anticipate that there's going to be some downward movement, because we're in some unnaturally bullish movements at this point. So it's only a matter of time before we get some bearish movements. And I realize people are definitely highly bullish and believe market's gonna keep going up. Well, nothing goes up forever. Period. Nothing goes up forever. There's always ups and downs. And my admonishment to you before I close this video is to make sure that you trade what you see. Don't trade what you want to see. Don't trade what you hope to see. Trade what you see. And if you're not sure about how to chart or do those things, you need to, subscribe to the channel. Find me at Educator2Trader for courses on charting or for trainings in these areas. Definitely increase your own knowledge so you're not just depending on what someone else has to say. Alrighty, so like and subscribe if you don't mind to the channel. We'll continue to put out good content. Alrighty, I'll see you in the market.